I am going to teach you how to preserve capital and stop blowing accounts. That is the name of this game. First, we preserve our capital and then we make money. So that is all risk management. Welcome to Risk Management 101. That's what we're calling this video, all right? So let's get into it. If you are just getting into day trading or you've bought in a few accounts, you need to only risk 1% of your account. So that means if you buy a 50K account, you're only risking $500. This allows you to build some type of statistical data and actually have something going for yourself, right? If you're just risking random amounts all over the place, you're not gonna be able to track and see your progress over time. So we're risking 1% of the account, right? Win or loss on that trade, you're done for the day. If you make $1,000, you leave, I go to the gym, I do something, I'm done. I don't look at the charts. If I lose, same thing. I go to the gym, I go get a coffee, I get out of my house so I'm not stuck glued to the charts. Break even is a dangerous slope, man. There has been days where I took one trade, I'm break even, and I'm like, okay, I have one more trade to take. I take that one and then I lose 500. That has led me to revenge trading and blowing accounts, or like with the mindset of I just want to get back to even. I just want to get back to like net $0 for the day. And that's dangerous, man. So win, lose, or break even, walk away. Go to the gym, do something fun, like just stop looking at the charts. 2 times per day, 3 times per day. This is also really, really useful depending on depending on your setup and how often it appears. For me and my psychology, my emotions, knowing I have one trade per day, knowing I have to wait and be patient for that one perfect setup before I can enter my trade and like risk $500 rather than just throwing $165 at like any fair value gap I see. Just stick in this area, man. In the long run, you'll be better. Risk to reward, or RR for short, is a ratio, right? How much money you are risking compared to how much you are making. So if you are risking $500 to make $500, that is 1 to 1, right? 1 unit of risk, 1 unit of reward. 1 to 2 is also very common, risking $500 to make $2,000. I suggest not projecting more than 1 to 2 and not going under 1 to 1, right? Like for example, if you're trending market, right? We're in an uptrend, boom, 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 boom. You enter here, you are more likely to hit TP right here and get a quick $500 than you are going way up here and trying to get to the $1,000 profit, right? Anything can happen in this little gray area. You can hit another fair value gap, price can retrace, like anything can happen here, right? Also in the long run, over time, 1 to 1s, you're gonna see more green days, which is better for your psychology, right? If every day you're trading, not every day, but if most days you're trading, you take a 1 to 1 scalp and you're hitting TP, I'm gonna feel like a much better trader than me doing a 1 to 2 and hitting full TP like twice a week or 3 times a week, rather than a 1 to 1 and I'm hitting it 4, maybe 5 times a week. So in the long run, this works out for your psychology. 1 to 2, you can make some serious money with this, man. You're risking 1 to 2 and hitting consistency with that, like every trade is 1 to 2, you're gonna bank. But again, that comes with technical analysis, that comes with knowing your model down to like a T. Also, when to go break even, when to take profits, things like that. These are some additional notes that I added. So I think Apex is the best for 50K accounts, really for any account. They're like $20 for the eval, which is nothing. But again, you have something tied, some money tied to that account. So you can practice with your emotions, right? So $20 is a good start. Their profit target is $3,000. So in a 1 to 2 RR, $3,000 is 3 trades. You can do that in 3 days, right? 3 days, if you're a good trader, you can easily do that. There's no consistency rule, so if you want to full port it, go right ahead. But that's not going to help you out, man. You got to really practice consistency, especially when you get to the funded portion. There's a consistency rule that you have to follow. So I would just already focus on following it now. 1 to 1 is 6 trades, which again, 6 trades is not that hard. Like you can do 1 to 1, 6 trades 6 times and get that in like 2 weeks. If you're a good trader and you take good setups, you can do that easily. Their max drawdown is $2,000. So you have to lose, quick math, four trades in a row before you blow the account, right? If you're a somewhat of a decent trader, 4 trades in a row as a loss is kind of hard to do, right? You probably win one, lose one, win two, lose one, things like that, go break even. So 4 in a row, it takes you a while to do. So this is the best way to structure your risk. I think I've learned so much about trading over the past like few months, few years. I've been taking this seriously, and risk management is probably the best skill you can learn, right? Other than learning to manage your emotions, which I'm gonna make a whole nother video about, revenge trading, greed, fear of missing out, like all these things are super, super important. And that's probably gonna be like my longest video. So that's gonna be coming out soon. And there's just so much you can learn, man. But risk management will get you farther than any other skill, farther than technical analysis, farther than learning what SMT is, all very important. But risk management will get you farther than anything else.